Did you know global wealth relies on hidden island economies? Where do the wealthiest hide their money to avoid taxes and prying eyes? The answer lies not in the bustling metropolises of world finance, but in remote, often idyllic, islands speckling the globe. For decades, these jurisdictions have operated in the shadows, offering secrecy, low taxation, and a permissive regulatory environment. They are the havens for global capital, attracting billions from individuals and corporations seeking to shield their fortunes from scrutiny. This is the world of offshore finance, a complex, often controversial system that underpins a significant portion of the global economy and remains shrouded in as much mystery as the islands themselves.
The concept of offshore finance isn't new.
Its roots can be traced back to the early 20th century, with pioneers like the United States and Switzerland developing banking secrecy laws to attract foreign capital. However, the 1950s and 60s marked a significant acceleration as post-war economies boomed and the wealthy sought more sophisticated ways to manage and protect their assets. Islands, with their often advantageous geopolitical positions and historical ties to colonial powers, began to emerge as prime locations. They offered a distinct proposition: remove your money from the reach of your home country's laws, its tax collectors, and its prying journalists. The promise was simple: unparalleled discretion and tax efficiency. The modern era has only amplified this, with technology enabling instantaneous transfers and global corporations leveraging these jurisdictions like never before. Among the most prominent players in this offshore arena are the British Crown dependencies and overseas territories. Places like Jersey, Guernsey, the Isle of Man, Bermuda, the Cayman Islands, and the British Virgin Islands have cultivated reputations as financial powerhouses. Their legal systems, often derived from English common law, provide a familiar framework for international investors. Crucially, they offer financial services, legal expertise, and a regulatory environment that is designed to attract global wealth. These islands, some with populations smaller than a New York City borough, actively compete to host trillions of dollars in assets, forging intricate links with the world's major financial centers. They are not merely tax havens, they are sophisticated financial ecosystems.
When we talk about offshore centers,
We're not talking about tiny fishing villages anymore. These are highly developed financial services industries. They offer corporate registration, trust formation, fund administration, and sophisticated wealth management. The appeal for clients is multifaceted. Firstly, there's the tax aspect. Avoiding or minimizing taxes in their country of residence can lead to substantial savings. Secondly, there's confidentiality. While outright bank secrecy is diminishing due to international pressure, many offshore jurisdictions still provide a much higher degree of privacy than onshore locations. This is particularly appealing to individuals in politically unstable regions or those with highly sensitive business dealings. It creates a shield, protecting information from being easily accessed by competitors or even governments. One of the key instruments employed in offshore finance is the shell company, a legal entity that exists on paper but conducts no significant business operations. These companies are often registered in offshore jurisdictions and can be used for a variety of purposes, from holding assets to facilitating complex international transactions. The lack of transparency in some jurisdictions makes it difficult to ascertain the true beneficial owners of these entities. This opacity can be exploited for illicit activities such as money laundering, tax evasion, and the financing of terrorism. While many legitimate businesses use offshore structures, the very nature of these arrangements means they are often scrutinized by law enforcement and regulatory bodies worldwide.
The Panama Papers,
The Paradise Papers, the Pandora Papers, these major leaks have, over the past decade, lifted the veil on the hidden world of offshore finance. For years, journalists in organizations like the International Consortium of Investigative Journalists, ICIJ, have painstakingly sifted through millions of documents, revealing the intricate networks and clandestine dealings of the global elite. These leaks exposed how politicians, celebrities, business magnates, and even criminals used offshore entities to hide wealth, avoid taxes, and sometimes engage in illicit activities. It wasn't just about tax avoidance, it was about opacity, about placing wealth beyond the reach of democratic accountability and public scrutiny. These leaks have been instrumental in forcing a global conversation about financial transparency. The allure of secrecy in offshore havens provides fertile ground for financial crime. Money laundering, the process of disguising the origins of illegally obtained money, is a persistent concern. Criminals, drug cartels, corrupt officials, and fraudsters all seek to move their illicit gains through these opaque systems, sanitizing them to appear legitimate. Funds are channeled through complex webs of shell companies, often across multiple jurisdictions, making them incredibly difficult to trace. This flow of dirty money not only undermines legitimate economies, but also fuels further criminal enterprises. The sheer scale of wealth moved offshore suggests that a significant portion may not be for legitimate tax planning, but rather for more nefarious purposes, shielded by the promise of discretion. It is crucial to differentiate between tax evasion and tax avoidance. Tax evasion is illegal. It involves deliberately misrepresenting income or hiding assets to pay less tax. Tax avoidance, on the other hand, is often about legal tax planning. International tax treaties, transfer pricing, and the strategic use of different jurisdictions are all part of legitimate tax optimization. Offshore structures can, for instance, be used by multinational corporations to manage their global tax liabilities efficiently, which is legal under current international frameworks, although often debated. The key is that the structures must have economic substance and adhere to the laws of the relevant jurisdictions. When properly structured and declared, offshore arrangements are a tool within the global financial system, not inherently a criminal enterprise. Recognizing the economic and social impact of rampant tax avoidance and evasion, international bodies have been working to bring greater transparency to offshore finance. The Organization for Economic Cooperation and Development, or OECD, has been at the forefront of these efforts. Initiatives like the Common Reporting Standard, CRS, aim to establish automatic exchange of financial account information between tax authorities worldwide. This means that financial institutions in participating countries collect information on financial accounts held by non-residents and report it to their home tax administrations. The goal is to make it significantly harder for individuals and companies to hide assets offshore from their tax authorities, fundamentally altering the landscape of financial secrecy. The implications of widespread offshore wealth hoarding are profound, particularly concerning global inequality. While governments struggle to fund public services and infrastructure, vast sums of money are spirited away into secretive jurisdictions, depriving nations of potential tax revenue. This isn't just an abstract financial issue, it has real-world consequences for education, healthcare, and social welfare programs. The ability of the ultra-wealthy to operate outside of national financial systems creates an uneven playing field. widening the gap between those who can afford to shield their wealth and those who cannot. This lack of fiscal participation by the richest individuals and corporations contributes to a significant erosion of trust in economic systems and governmental fairness.
Consider the case
Of the Cayman Islands, this small Caribbean nation with a population of fewer than 70,000 people is a global leader in financial services, hosting thousands of investment funds and hundreds of thousands of companies. Its economy is overwhelmingly driven by finance, accounting for a substantial portion of its GDP. While many residents benefit from the lucrative financial sector, the nation's development is inextricably linked to its role as an offshore hub. Critics argue that this reliance makes these jurisdictions beholden to the interests of international finance, sometimes at the expense of broader economic diversification or social welfare initiatives. The pursuit of financial dominance has dramatically reshaped these island economies. Our role is to provide efficient and compliant financial solutions for our international clients. We operate within the legal frameworks of the jurisdictions we are based in and adhere to all applicable regulations. We are committed to transparency within the bounds of client confidentiality and legal requirements. It's about facilitating global commerce and investment. Many legitimate multinational corporations utilize offshore structures for operational efficiency, for managing risk, and for accessing global capital markets. We believe that robust regulatory oversight, combined with the specialized expertise found in offshore centers, creates a stable and attractive environment for legitimate financial activity, contributing positively to the global economy through investment and capital flows. The debate over offshore finance is far from settled. While international efforts are making it harder to hide money with complete impunity, the system is incredibly resilient and adaptable. For every loophole closed, new ones emerge. As technology advances, particularly with the rise of digital currencies and decentralized finance, new avenues for opacity could potentially be created, or existing ones leveraged in novel ways. The struggle for greater financial transparency and accountability is ongoing, pitting the desire for privacy and tax efficiency against the need for fair taxation, economic justice, and the prevention of illicit financial flows. It's a global challenge that requires constant vigilance and international cooperation. These secret islands, cloaked in beauty and discretion, continue to play a critical role in the global financial landscape. They represent a complex interplay of legality, ethics, and national sovereignty. The immense sums of money processed through these offshore centers highlight both the power of global capital and the persistent challenges of ensuring fairness and transparency in the world's economy. As the financial world evolves, the secrets held within these distant havens will undoubtedly continue to shape our understanding of wealth, power, and the very structures of global finance. The question remains, can the world's wealthiest continue to operate from the shadows, or will true transparency finally prevail? The world's wealth, hidden in plain sight, shapes our reality.